All right, back on MorningLine, final segment with Doc Friday. Several calls come in, so we'll get to as many as we can. And let's go next. He waited through the break to Daryl. Daryl, good morning. Hi, Daryl.
Good morning. How are you this morning?
Good.
Good. How can we help you?
Hey, my question is, I've been with my company almost 30 years, and I have a pension plan. And would it be wise when I do retire to let them send me a check each month or take my pension and roll it over to my own individual IRA and use that interest, let that interest build up for myself instead of letting the company
Daryl, are you married?
take that interest?
Are you married?
Yes, I am.
Okay.
Yes, I am.
So sometimes, and I'm going to put this little disclaimer, I'm not a financial planner. Right. I'm going to repeat what you will hear often over at the desk next to me here, where Hank Parrott usually says to people, who is a financial planner. So you might want to call this same question on the retirement report. My understanding is if you're married, they give you a choice to extend it through your lifetime and their lifetime through the pension. But you know, that would be your one option. The second option is cash is king. That's usually Friday's answer. Mm-hmm. Cash it out, put it into a controlled account that you can grow at your own rate. And because pensions are locked in, this much money all the time, where maybe if you put it in a retirement investment account of your own, you may be able to grow it at 6, 8, 10% more than what you would actually get through a pension. But I will again say, this is one of those questions. Hank always has this free consultation to go to. I'm sure that if you have a financial planner, you want to sit down before you make that decision. They usually cover insurance, different things are in the package, so you don't want to eliminate one by taking a choice with the other. You really need someone that can read the package that you're involved with and make sure you're not going to lose a benefit by taking it all out or miss benefits by leaving it all in there. So you really do need to get a second opinion on that one. But from the tax standpoint and from my own, I like to have my own money. I like control of my own money.
Cash is king.
But that's just my opinion.
All right. Hope that helps. Let's go next to, we've got Jeff. Jeff, good morning.
Hello there.
Hey, Jeff.
I've got a question. I am single and I'm on disability. My question is, I haven't filed taxes since I've been on the Social Security because I hadn't really made any money.
Right.
Well, I received some money through a inheritance. Okay. And I've got it in an account, and then I've got a retirement account. But this year, with the windfall of the money coming through, I think I have made some money where I might be concerned about having to pay taxes. I guess first, should I be filing taxes every year?
No, you were spot on. As long as you were just living off a disability, the answer is no. You didn't need to worry about that. And the only thing with the inheritance would be if you inherited like an IRA or something that has tax-deferred income. You may also put money in a brokerage account where you're earning or selling and buying stocks. So you may have a capital gain. Your disability may still not be taxable, but there may be a requirement for a tax form just to notify the IRS, hey, I did sell these stocks, but this was my basis, and I did or didn't make much money. You'll probably be in the 0% capital gains rate as long as they're all long-term capital gains. Does that make sense?
Well, I was just wondering, because this is the first time I'd ever made any money, and yes, it is in stocks and bonds.
Right.
Yeah.
Yes.
Good. Well, it's good that he asked.
No,
and
it's a great question.
I understand why you thought that.
I would say that this is the first year you will want to go, and you could even go to one of these free locations. You may want to get an expert to look at your 1099-B, which would be your stock statement, along with your disability, just to make sure that there isn't a requirement this year and maybe moving forward, because buying and selling stocks can trigger taxable situations.
Okay. All right. But by and large, probably nothing to worry about.
No, I mean, again, if these are long-term, and if he inherited them, they'd be long-term most likely. It's 0% capital gains up through the 12%. So up to 50,000, 60,000 in gains, he won't actually have to worry about taxes.
Gotcha. All right, let's go next to Mark. Mark, good morning. Hi, Mark.
Hey, how are y'all doing?
Good.
What she brought up a few minutes ago with the charitable contribution intrigues me. I'm retired. Both my wife and I get, of course, our checks from Social Security. That's about $3,300 a month. Mm-hmm. I had a 401k. I've got a 401k, and I go ahead and take about $1,500 a month out of it. Now, do you combine those for your total income, and then you can contribute 60%?
Well, there's two different things. The qualified charitable contribution that I was talking about is only part of what would be the money taking out of the 401k, and only what you're required to have to take out, not what you choose to take out. So if you're...
Yeah, she's having to take $461
Okay, so that portion, if she's required to take that $461 a year or whatever, would be able to go directly to a charity and become tax-free, okay?
Yeah, we've already done that.
Okay,
correct.
so the 60% is what the tax law says. You can take 60, and you would add up your total income, which is the total Social Security, and answer your question, and your total contribution or distribution from your retirement accounts, totaling that up, and then that would go on your Schedule A. It's just, as you know, as a married couple, and if you're over the age of 65, you're now at $26,000, $27,000 you have to have before you even get $1 of deductions.
So we have to, okay.
You know, and that's the problem with the current tax law. But if it does work for you, you know, because of the situation, certainly play with the numbers and see what happens for you.
I like to give, but I don't think I can give that much.
It's a lot to give. Well, you know, normally what happens is somebody inherits something and they give a large amount, and then they can, it's a carry forward, so you can carry it forward for a number of years. Yeah. So if you inherit something and you say, oh, I'm going to give all this, and I had a lady that had $100,000, it's collectible, she donated that, got the value of it, didn't have to sell it, which made it easier for her, and then last 5 years we've just rolled it.
I gotcha. I think it's great. I'm with him though. Yeah, it's nice to give, but you know, sometimes there's limits. Let's go to Jay. Jay, good morning. Hi, Jay.
Yes, hello.
Hey, how can we help you?
I paid $29,000 this year.
Okay.
And I was wondering if I have to pay taxes on back pay for $16,000 I made, or $18,000 I made for back pay for Social Security.
Okay, so what he's talking about is he's under the age of 65 or full retirement. He's on Social Security right now, and there is a limit of $17,000 or $18,000 that he can earn, and everything he earns above that is 2 to 1. So he has to pay $1 back.
No.
Oh.
I'm not on disability. I just got back pay.
Okay, so you got back pay for disability or Social Security?
Disability.
Okay.
But I didn't.
Are you on it still? Oh.
Excuse me?
So you're saying you are not on disability, but you got back pay for disability?
Yes, ma'am. $18,000.
Okay. But the back pay would have nothing to do with the current year, so I don't believe you should qualify. Again, you may have to double check that answer, but I don't think you should qualify for having to pay back anything since you're not on actually in the program.
Okay, thank you very much,
No
ma'am.
problem, thanks.
Well, I wonder how that played out. If he's not on it, but he did get back pay, maybe he got better.
Well, so I'm wondering if there's a short-term disability situation where he paid him for that short term, but he didn't qualify for full-time disability, I guess.
Okay, all right. Listen,
always fun.
Where do you work again?
I work in Brentwood.
Okay,
Been working there for a while.
You work in Brentwood, and yes. You have clients that are a range of folks.
I do. I work from the person that is retired that may actually have 1 or 2 situations where something's come up. I do a lot of work with veterans now, and then I work with mainly. I mean, a big chunk of mine are entrepreneurs. I love my entrepreneurs because entrepreneurs and people that have lots of rental properties need my services. It's just one of those kind of hand-in-hand kind of situation. As I said from the beginning of the show, you only have a W-2. You don't need a tax expert. I can't do anything you can't do. I mean, it's a W-2. It's not magic. So, you know.
I think some people go to any number of services out there, individual like you or some of the big companies that do it, simply because they fear so much that, yes, you're right, I hear what the doc's saying, but what if I go on there and make a stupid mistake and then I get audited and I'm going to jail?
Yeah. Well, answer the questions honestly. If you're married, you're married. So you can't claim head of household. This is the ones that I run into, right? So the biggest problem is a married woman has a child, but she finds out by clicking head of household, she gets 3 times the amount of refund that she would have gotten as married filing separately because she didn't want to file with her husband, which allows no earned income. So she clicks the other one, and voila, here's a shocker. She gets audited. So, you know, you can play your odds however you want, but the honest answer is the honest answer. Now, if you've been married and your husband lives in a completely different house and has for more than 6 months, and you both maintain separate residence, guess what? You are legally head of household.
Right.
So there are answers, and those kind of questions, maybe you should go to an expert to find out the right answer. Then you know how to file your taxes in the future. But if you're living in the same house with a person, even though you want to divorce him, I don't care. It is still married, and you're still in the same house.
Yeah, exactly. And it's pretty basic. I'm really glad that you said that. For most people, you can do it yourself. And if there's someone who wants to do it themselves and they just, for whatever reason, don't have access to a computer,
well,
I guess
you can go to the library.
Yeah.
There are also some mobile sites that the government sets up with
yeah, they travel around.
I can't remember what the name of the organization is, but I'm sure it'll be on here at some point. But there are, and if you don't know, and you can certainly call my office. I have it on the website. I just don't remember the name of it right this second. But there are some where you can walk in with your documentation, and they'll do your taxes while you wait. There's several locations around the area.
All right, so as we sit here mid-January, are there any key dates that anyone needs to take attention to if they have something unique they're dealing with leading up to April 15th?
So I will say, if you missed this date, it was January 15th. That was our last day to pay our estimated tax payment. It's not too late. Put the freaking money in the mail. Do it. So we got that one out of the way. Next one is going to be March 15th is the big deadline for us. And then you have April 15th. Now, if you're a business owner or a person that actually has rental properties, remember January 31st is a major day for us. We have to have all of our 1099s and W-2s in the mail to our people. So if you have a guy that repairs your roof, you put a new AC unit on your house, and not your primary home, on your rental properties, you have a lawn guy that does all your rentals, those people are supposed to be 1099. That's simple. No excuse. Government basically makes it pretty black and white. The only people that do not 1099 is if we're doing it on our primary home. Really nothing to track there.
All right, and e-filing started today.
Today, yay!
So today, e-filing, if you get it in there, then you probably could get a check on your refund back 3 weeks from now at the latest.
Exactly.
3 weeks. And again, you were saying if you don't get your W-2 by February.
Well, theoretically, I agreed with Nick on one part. If you don't have it by January 31st, I would automatically contact the employer. They may say, we put them in the mail yesterday. Great. I would confirm the address. And in many cases, make sure you got a good email, because they could probably email it to you immediately and you don't even have to worry about snail mail.
Do some of your clients fear the IRS?
A lot of people. Job security.
Do you need to fear the IRS?
Well, a lot of people talk about straight tax. Why don't we just change the tax code? Why don't we just have this or that?
Taxes,
no question it's going to happen that the IRS has an extreme amount of power over every single one of us. And if they did not get taxes from us, what would we fear? I mean, the fact is, we would no longer fear the largest employer of the entire United States, right? Because we don't have to file. We're not questioned. I go in, I buy a candy bar, I pay 20% tax. That employer now, or that company, if it sends the money to the government, I can make all the money I want because I only pay tax when I use the money. Awesome.
One last question, just quirky stuff as we wrap things up. Do you have any clients that are sovereign citizens?
I do. I do. I never even knew what that was until I have somehow got myself into a little niche, and they all have. And the new question on the tax return is, do you have virtual currency?
Just 10
do you
seconds.
Have Bitcoins?
Yeah, that's right.
So you have to answer that question honestly, or they will know.
But there's a lot of Americans, some of them, say they don't think they need to pay taxes. You do.
Yeah, it's a law. It's the law.
It's great seeing you, ma'am.
Thanks.
We'll see you again soon. I'll be back with a programming note right after this. I wish you had